Hello and welcome to the day ahead. It is Monday, June the 20th. I'm Andrew Gagan. Let's catch up with the markets. A modest bounce in the US on Friday, although that didn't stop the S&P 500 from posting its biggest weekly percentage drop since March 2020, as investors trade on the growing likelihood of a recession. Energy stocks fell the most on concerns that a slowing global economy could sap oil demand, while the Dow and Nasdaq fell for a third straight week despite mixed trade on Friday after Fed Chair Jerome Powell stressed again the central bank's focus on bringing inflation back to its 2% target. Adding to investor woes, a conference board survey that found nearly two-thirds of CEOs expect a recession by the end of 2023. While the Biden administration said it's considering putting a pause on federal gas tax in a bid to drive down the price of fuel, with the May Consumer Price Index coming in at its highest level since 1981. Well, in the latest economic data, US industrial production rose marginally for May to be up 5.8% on the year, while manufacturing production fell. The Conference Board leading index falling by 0.4%, which was in line with forecasts. Concerns over economic growth saw Treasury yields fall, with the US 10 falling to 3.23%, the 2-year up slightly. Major currencies were weaker against the US dollar. The Aussie dollar falling below 70 US cents has since come back a little. And on Friday, the Fed signalled that the rising risk of recession will not stop its battle to tackle inflation. In its twice-yearly monetary policy report to Congress, the Fed's Open Market Committee stated that its commitment to restoring price stability, which is necessary for sustaining a strong labour market, is unconditional, while Fed Chair Jerome Powell reiterated they're acutely focused on returning inflation to its 2% objective. Elsewhere, Cleveland Federal Reserve President Loretta Mester said it will take 2 years for inflation to fall to the central bank's 2% target, while Fed members Waller and Kashkari said they support hiking another 75 basis points in July, assuming the data comes in as expected. And meanwhile, Eurozone headline inflation for May was finalised at 8.1% year on year, with core CPI at 3.8%. All right, looking to what's coming up on the data docket this week, loan prime rates for China are out today. Fed Chair Jerome Powell addresses the US Senate Banking Committee on Wednesday after the FOMC pulled that trigger on a 75 basis point hike to combat inflation. He also has a follow-up testimony teed up with US House of Reps Financial Services panel on Thursday. Also on Thursday, US jobless claims are out alongside the flash manufacturing readings for the S&P Global. And the University of Michigan drops its June consumer sentiment estimate on Friday, which is currently sitting at record lows, before rounding out the week with Japan's year-on-year inflation rate, where the question remains if or when the Bank of Japan will lift interest rates. Well, having plummeted to 18-month lows, there appears to be little respite for the local share market, with ASX futures currently off 0.3%. And growing signs of global economic slowdown have hit commodity prices. Brent crude falling more than 5.5% on Friday on fears of falling demand, while the strong US dollar also cooling demand there. And economic weakness, particularly in China, has dragged on the iron ore futures price down 2.7% to $131 a tonne, with the steelmaking ingredient losing more than 7.5% over the week. And base metal prices were mostly lower, although nickel rose, while over the week tin fell more than 11%, and the gold futures price down around 0.5%. And the weekend saw extreme volatility in the crypto market, with Bitcoin tumbling more than 10% before it rebounded back above $20,000. Well, checking in on the local data this week, the RBA releases the board minutes from its most recent June meeting. Governor Philip Lowe will speak, giving us a sneak peek into what is on the RBA's mind looking to future rate hikes. Wednesday, we get the detailed skilled job vacancies for May and a view into which industries are suffering from skills shortages. In keeping with labour, Thursday is the detailed labour force numbers, a breakdown into demographic and regional job data, plus business sentiment for the month of June is released. And finishing where we began on monetary policy, Friday, Governor Lowe talks all things inflation and how central banks around the world are tackling it. And that is your day ahead. We'll see you again tomorrow.